on the super cycle trends, why they exist, why they form, but it will show as well a lot of charts. So this is going to be an interesting session. We've got a Q&A in the end, and at the very end, I'm talking about some special offers I've got for my upcoming futures webinar that starts mid of September. All right, so let's move forward. Well, that is the risk. That is the risk disclaimer. Futures, crypto, and forex trading contain substantial risk, and it's not for every investor. I guess that's obvious. You can potentially lose all your investments and only risk capital should be used, and always make your own due diligence, especially today, because I'm talking about my views, right, of the market, my views of the big picture, the capital markets, and what can be drawn from that and the opportunities. It's really up to you to form your opinion, but you're welcome to share mine, right, or engage in the discussion. Well, let's start with a big debt bubble burst. That's a recap from the webinar I did in March. Who attended that one? The March webinar, the big debt bubble burst. Just type it in the chat. Who attended that? Because that's kind of the background information why the super cycle trends are there, right? Initially. Okay, so we've got a good number of people. I'm putting the link here in the chat of the webinar that's recorded and put on YouTube. If you haven't attended it, well, you can watch it. It's about an hour as well. So let's have a quick recap, really quickly, right? The big debt bubble burst. Well, this is the bubble of the government debts, the global, right? The global bubble. This is a burst at the moment. It's not a quick and sudden burst. It's a very slow burst. Well, let's just take the example of the USA. Everybody knows that the US is indebted horribly, right? When we see, this is the chart. There are more than 32 trillion. Well, now it's actually 36 trillion in debt. This is an exponential chart, and that does not look very sustainable, right? But as long as the yields were very low, like the aftermath of the great financial crisis 2010, we're talking about zero yields, right? Zero interest. Well, you can make a lot of debt if you don't pay interest. In Germany, interest even were negative, right, on government bonds. Well, it's very easy to grow that mountain. But when the yields increase and the higher that mountain gets, well, the bigger the pressure, right, on the yields actually to increase. Well, this is what we see here. We see a yield increase over the last few years. That looks even worse for Japan. Japan is in an even worse shape than the US, right? As well as every other countries. So actually, you have to look at both, right? The level of the debt and the yield that is applied on that mountain of debt. And here The Economist has actually written it really nicely. This is a graph of US interest payments. They reached, I think it was 1 trillion, right? We see how this spikes. Well, it's because the yields are increasing. And for the very first time in 2024, the US interest expenditures, what they pay to service the debt, is bigger than the defense expenditures in the US. Well, that's quite amazing, right? And The Economist has labeled it nicely, the budget bust up. Forget the shutdown. America's real fiscal worry is rising bond yields, right? This is the leverage. And we see that around the world. When that increases, well, that will increase anyway, right? But if that increases, well, we'll see how the debt bubble it gets. I mean, lets out the air quicker and quicker. And when that debt bubble bursts, well, we actually see a lot of liquid money, right? Liquidity entering the global market. And this is where, as a future trade, it becomes interesting, right? I mean, we can trade interest rate futures, but when the liquidity goes out and looks for a safe haven, it goes in all kind of different asset classes, right? And with futures, well, we are quite flexible with the asset class. So what happens is that when the big market actors, they don't believe anymore that this bubble of government debt is safe, right? It was always seen as a safe haven. But when doubt creeps in, well, they will look for other things, right? And basically, well, we can see the global debt bubble, we can see it like this as well. It's like onion rings. And I mean, the weakest currencies, the weakest countries, they will fall first, right? And that's what we call a sovereign debt crisis. And it will start somewhere at the core. The US is in the middle, right? The US will not fall first. It's somewhere outside at the core, outside at the edges. Might be Argentina, might be Turkey, it might be Japan, right? But it's basically eating its way from outside in, right? And the more this accelerates, well, the more confidence in governments and government bonds will be lost, and more liquidity will actually enter the market, right? Looking for a safe haven. And that's what we call flight to quality, right? Money is not finding enough quality in government papers anymore. Well, they're looking for other things. That's a flight to quality. It flights to the safe haven. Sorry, a flight to the safe harbor. But unfortunately, there is no safe harbor, right? Before, government bonds was a safe harbor, or if they need to go otherwhere, there's actually no safe harbor, and that will make that will create quite some stress, right, of the market, and money will move basically from one asset class to the other, right, and creating bubbles here and there. If a bubble gets created, obviously that scares money. It gets out of the bubble, goes to another asset class, and that lets the bubble explode. We have actually seen a very early bubble in palladium, and we're going to look at that chart as well. So this flight to quality out of government papers, that leads to this phenomenon, let's call it what we call the big currency shifts, right? Big currency shifts, which is something we can trade with Forex, right? With Forex systems, and as well the super cycle trends. Well, this is what we capitalize on with futures, and we still have a lot of people coming in. Okay. Well, I've worked for one of the biggest insurance companies in the world, and it was quite interesting to see during the very low zero interest period what they did. I mean, they had to bring up interest, right, to pay their capital holders. What they did is, well, they already diversified back then, more than 10 years ago, 15 years ago, into infrastructure projects, into real estate, because they couldn't generate, right, the return on their money they hold from the clients. Well, the next phase now, right, with the big debt bubble burst is actually the fear of the return of the money, not return on the money, how much they can make off. But if the money ever comes back, right, this is what basically triggers the flight to quality. So who are the big market actors? Well, it's pension funds, sovereign funds, central banks, family offices, endowments, and insurance companies. Right? They will move, and if they move, well, big money is moved, and then retail investors, retail traders, and investors, they'll basically jump on the bandwagon, right? So this is the overall view on the market. Now, this process of the debt bubble burst, well, that will take 10 more years, right? It's a very slow burst. And it'll actually, it's something good, right? Because it allows time to actually trade the markets for 10 years, right? Which is great. Okay, well let's have a look here. Well, that's written up right in text. What I just talked about this big picture outlook. Let's have a quick look over. So the government will still have a lot of people joining. Just bring them in. The government's debt bubble around the world is the mother of all bubbles. It's huge, right? It's the biggest market in the world, government debt. So that triggers the sovereign debt crisis. We talked about that. That's a flight for the safe to find the safe harbor. Well, actually, all hard assets will be impacted, right? Because the safe harbor, well, that's hard assets, right? Real estate, gold, stocks, all that is perceived as relatively safe. So that will increase tremendously in price. We see it already for a couple of years now, right? And I'm talking about that for a couple of years. Equities, US equities is in a vertical market. What does that mean? Well, it's going up exponentially, right? Vertical market. So prices of hard assets don't go up for inflation. but because of the loss in confidence in government bonds, right? That's a different reason. If the debt bubble bursts slowly but steadily, we'll see money moving towards those, including actually crypto assets, right? Digital assets. Bitcoin is known as the digital gold. So I perceive cryptos as well as hard assets, right? So they are digital. Now, over the decade, over the coming decade, the US dollar should actually lose in value, and money will not know where to go. Well, if the dollar is not, if government bonds are not safe, if the dollar is not safe, well, it's different. It's difficult to move big money, right? Because the market is not that liquid for these big money ships. So this is what triggers the super cycle trends. And the consequence is bubbles, right? Bubbles to pop up in different asset classes at different times. And that's the interesting part, right? It's not bubbling all at the same time, different bubbles at different times. We've seen gold bubbling, right? Well, now probably silver is catching up and golding making a dive and maybe silver creating a bubble, right? Palladium is a blueprint. We're going to have a look at that later. What does it mean for traders? Well, these are great trading opportunities, right? If you are trading different asset classes and different time frames, as well the lower ones, bigger ones and lower ones. So what we're going to see is increased uncertainty, because all of that creates it, coupled with excess liquidity means more volatility in the markets. And as you all know, volatility is a trader's best friend, right? And it's actually a trader's dream, because that's a period of 10 years. That's a long time to capitalize on that. I've been waiting for this actually for many years. And well, crises are coming. You all know about the Corona crisis, war, etc. And there are more crises coming. They're all adding more liquidity, because central banks are printing money, right? If a crisis comes up, more liquidity entering the market, and that fuels even more, right? That the creation of bubbles. So we have already seen big and spectacular moves in energies, right? Crude oil went down to below $10 a barrel, and then within a couple of months, it went up to above 100, from below 10 to 100. That's incredible. Or metals, right? Gold. Gold went from 1,400 per ounce to now we're above 3,500. Incredible. Stocks, where the stock prices were in 2008, 2010. Bitcoin, incredible. Forex, we see big move in the Forex markets and interest rates, right? So there's this flight to quality, and that's going to accelerate. That's a nice thing, right? It's going to accelerate, and there's some you can work with it in the end and get accustomed to. So what is the definition of super cycle trends? I found something in capital.com. It's an extended period of boom and bust in the commodities markets. I would see it a bit broader, hard assets, with prices rising significantly above their long-term trends. These moves may even outlast the business cycle and typically persist for well over a decade. Right? So this is known, and the last cycle we had of that sort was the metal boom, right? That went into 2011, and now we're in another such cycle for a decade now. Well, this is the theory, right? Now let's have a look. Let's have a look at a chart. This is the commodity index chart, CRB, commodity, a quarterly chart. And we can actually see how these extremes are marked by important events. There was a great financial crisis, 2008, up here. And this low, that's a Corona panic low. That was March 2020. Everybody remembers, right? That's the high, that's the low. Well, this is a consolidation pattern. This is a momentum move. This is a consolidation pattern, consolidation high. This is a consolidation low, Corona panic low. And that's triggered. Well, we can place a base here, right, with these touches. It was horizontal line. And when price crossed, like rebroke the line above, I understood, hey, something is going on. This is the low. This is an important low. This is an important high. This will not go lower. This will go higher, much higher than the consolidation high. And this, I mean, this pattern, if you don't know what it is, I see the pattern. I know what the target is. The target is up here, which is the momentum move, a measured move, right? The momentum, the prior momentum move. You just put it here and you project it out. Well, it gets up here. That's a 10 times, right? That's a 10 folding, a 10 bagger of prices down here. Well, that means a lot of asset classes and assets will do, I mean, needs to build bubbles, right? In order for the index to make a 10 bagger. Now, these are stop run levels. We know that, and we can see here how this price has tested this stop run level. Then we saw a retracement, and we are right here again. Well, this first big move, that took out the very first stop run level. The stop run move. Now we're at the second, then there's the third and the fourth, and then we're at all-time highs, right, for this index. So this is an interesting moment in time. Um, I've shown that chart last year at the webinar, I think 2 years ago, 3 years ago. I'm basically talking about the same thing, and it's reinforcing, right? So this is what we see. This is what we just saw, the quarterly chart. Now let's zoom in. Let's zoom in into this here. Weekly chart. This is how it looks like, right? This consolidation, that's the weekly chart. And I'm interested, are there any bullish signs, right? That this goes higher? Well, there are bullish signs. This here is an S1 pattern, a gecko pattern. We see a breakout, right? A breakout and a failure. This is an S1 pattern. And then that continues, doesn't develop a lot of follow through, stop run levels here. And then actually it morphs from an S1 into an S2. And that is right here. This was last year's webinar, the same, right, at the same point of time. The chart was here. And when you were there, you might remember I said we actually should see a drop and then we should see a new high. And this is what happened, right? So these patterns very often they do what they're supposed to do. We see it here. So the drop went below the midline, below the brownish line, and it tested the angular test line, this error, upwards pointing error, and a rebreak of the last dominant high, this one. Well, that basically flashes an entry signal for system 2, right? So all this is a system 2 pattern. This here is a system 1 pattern, and we've got two patterns, one after the other. So that's double pressure. So this chart, I mean, bullish pressure is building, right? Obviously, it could pull down, right? That's still possible. But with these two bullish patterns, I think we will just move onwards, right? And when this stop run level gets triggered, this is just a test. When this gets broken higher, well, basically when the consolidation higher on the weekly chart gets broken, then we should see momentum get to the next stop run level, etc. But even though the CRB index is not showing a lot of follow through, individual symbols, asset classes are doing perfectly well, right? So let's have a look at that. Well, first, US dollar, the big short. Why is it the big short? Well, this is a quarterly pattern of the US dollar index. Well, that's a future, the DX future that is tradable. Quarterly chart. Why is it a big short? Because this is a pattern on a quarterly chart, right? That's a very high time frame for a pattern. And this is a short pattern, an S1 short pattern. And this is the important line. That's what we call the base. We've got the breakout. And we're basically stalking this for a rebreak of the red line. And if it rebreaks, well, then hell should break loose, right? Because that means that this pattern is executed, and these are the stop run levels, and that it should develop momentum to the downside, similar momentum to what we have seen here. So we should see consecutive quarterly bars like this, big red quarterly bars intermixed with a doji or one green bar pullbacks, right? And so the dollar, if this goes down, the dollar gets weaker. That's what the US dollar index says. And if the dollar gets weaker, what does it mean for the commodity markets? What happens with the metals and all the other commodities? Who knows what happens? There's some correlation with it. Not one-to-one, but there's some correlation with it. If the dollar goes down, the dollar loses value, commodities go up, right? Down here, that was around 2011. It was the lowest level of the dollar. As you might remember, this was the high, right, in gold and silver, 2011. And as price moved up, well, we had this long consolidation, right, in the metals. and now we have got a lower high, right? Prices are moving back towards the line. We already see gold exploding. Or just imagine if we develop momentum on the downside, gold and silver and other commodities, they will balloon, right? And this is how we come to these outer targets that sound, yeah, unbelievable. Outer targets, like I think silver is at around 200. The outer target currently it's at $40. So the target is at 200. Well, that sounds unbelievable, but this is what happens, right? With the yeah, with the super cycle trends. It's a very special market environment, if you so want, and a lot of capital floating around, not knowing where to go. We're basically expecting commodities and hard assets to go exponential. If you want to know how that looks like, a chart that goes exponential, well, look at the crypto charts and you know, right? So something similar are we expecting for the other hard assets, including your US equities or global equities. Let's have a look here at metal, so gold, right? What we see up here is the chart that I had shown last year in the last year's webinar. And what we see here, monthly chart, quarterly chart, 2024, and down here we see the monthly and quarterly chart now, right? Nowadays, these days. So clustered with patterns, right? Turtle pattern, two S1 patterns, and that shows the bullish strength that is there in the market. The circles are stop run levels, and once price gets there, well, it has the tendency to slip through, right? To create a stop run move. That's what we call it. And this is the interesting chart, right? It even clusters these highs cluster with the highs back from 2011, the old all-time highs. And this is a chart I've discussed in the Weekly Trader Insights back then. That this chart is so clustered with clustered with stop run levels. I mean that's incredible. I mean I cannot remember having seen a chart like that. And I've talked back then in the newsletter that we should see a very, very big move, a very big stop run move. So I'm just posting that newsletter here. You can read it. That was back in October 2023. Yeah, probably somewhere around here. So what happened? Well, we see it, right? What was created is a big stop run move. That's how it looks like, right? A series of bullish bars intermixed with small red bars, singular events, right? But it's basically a one leg move. That's a stop run move, right? And that happens when these important levels are run over. Back here, that was in 2019, even before the Corona crisis. 2019, we had an important signal here in gold, around 1,500, I think, dollar per ounce, S2 pattern. And then, well, we had other patterns building, and this is how it looks like, right? Here, the consolidation looks big, but if it produces the move, right, we can actually see how low the risk was, right? Entry and stop, entry and stop. We see the risk box, how low risk that is, right? That was. Let's move to other charts. US other asset classes, US equities. This is the Dow Jones chart, the YM future. And you can take another chart, the ES or the Nasdaq as well, right? We see this is a chart, right? It goes up and it goes up. You might see it. It's not a straight line, right? It's curvy, and that's what we call a vertical market, and that should basically continue to increase like that vertically. That's an exponential move, and we call that a vertical market. It basically started back here in during the Corona crisis. Again, March 2020, right? Marked the low, the same low we see in the CRB index chart. And then we had the Ukraine war that started here. And a few months later, we had a bull signal, right? That we talked about that in the community. That basically told us that this is not going to get a global war, right? This is going to be a regional thing and not have a big impact on global economy. That was the entry. Then we had, well, another S2 signal, S1, S2, double pressure goes up. Then we had a really big sell-off. Well, that was the tariffs announcement of Trump, right? In beginning of April, I think it was, and it created another pattern, right? So this is not over. It's unbelievable, right? How it is so resistant. But we see this. I mean, the higher a chart like this goes, right? You will see big sell-offs, right? Like that, scary things, scary sell-offs. And then when it recovers, well, we know the entry signal, right? That the pattern gives it. Well, this is basically, I wouldn't want to get in down here, right, long, but when the pattern flashes a buy signal, well, that's basically then the confirmation. And the most current chart, like the Friday this week, we have broken to a new high, right? This is what I've put down here. This is the daily chart of the YM. We have just broken, that's a Friday candle. We have just broken to a new high. And whatever time frame you look at, you see the patterns, right? That's an S1, that's an S1, but one time frame lower on the 4-hour chart. Okay, let's move on. Energies, right? So we're going from one asset class to another. Energies. So this is gasoline, the RB future. It's another global future that can be traded basically 24 hours a day from wherever you are in the world. As well, Corona crisis that marked the low, right? Big move. It went from, well, they're back adjusted, so it's a bit difficult to see. It was obviously not negative at the time of this year. So we've got another pattern. I've put that out in a weekly Trader Insight newsletter from a few months ago. RB, that's a long signal, right? Based on an S1 pattern. And that gives as well a target. It's doubling current price, right? We're looking for a measured move. This is a momentum move. This is a pattern. It goes hand in hand. It's basically a half-mast flag, right? And a half-mast flag tells us, well, if you get up here, this consolidation is in the middle, right? That's why it's called a half-mast flag or half-mast pennant. These are great signals. So that's a blueprint, Palladium. We traded that back then, and those in the community who have been around in 2016, we talked about it, right? This was an entry at around 600 for Palladium. There was a stop run level. We discussed it. It was broken. And as it had broken it, well, it was then sitting on top of it and forming another pattern, right? And from there on, well, it basically it exploded. It went from 600 to 3,000. Well, that's what we call a bubble, right? It increased 600-fold. And the bubble means, well, you want to get out sometime, right? You don't want to buy and hold forever. Because what happens with the bubble is, well, it went from 3,000. There was a very sharp correction. Don't remember what that was, but it went to 1,400 within a month, right? Incredible. And then it even made a new high, and currently it's around 1,300. It's somewhere down here. So the bubble is over, right? Well, now other things are moving. Gold and silver and Bitcoin, right? Whatever. So this is the charts, how they look like, right? So we get an exponential rise, and then it deflates, basically, right? Bubble explodes. And then it might form again. That's what we see with the cryptos, right? A bubble forms and then it explodes. Well, it's not over. Right? The next bubble comes, then it corrects 80%, Bitcoin 85%. Then the next bubble comes. You see, so bubble after bubble, and probably that's the same thing we're going to see with the hard assets. Right? You're not looking for a singular bubble like the tulip bubble in the Netherlands, and then it's over. No, it's probably going to be because money is entering the market. Any questions so far? Any questions so far, please? Because this was a bit theory, right? Now we're looking more at recent trades and trade opportunities. Okay. Right. All right, so that's silver, a pyramid trade on the 4-hour chart. That's what we see here. That's a 4-hour chart. That's our 4-chart layout. That's what we use, right? So that's a 4-hour chart, one time frame higher daily chart, weekly chart, monthly chart. And we need these 4 charts in order to see that the rules are fulfilled, because the rules come on different time frames, not only one. But the pattern itself, well, is on the lowest time frame here and on the 4-hour chart. And that is an S1 pattern. What's really important is an important element of this, the three systems and teaching and trading is the test bar. And this is the test bar, right? It's an excitable price action event. Very often it's a singular bar, boom, right? Very, very big bar that basically scares a lot of people. Well, not only scares, there are a good number of counter trend traders that actually get into this short, right? They want to trade this short, so they get into this. We can see the nicer and stronger the test bar is, well, we know the more counter trend traders are actually in it, right? Have entered short. And a lot of long traders who had been invested in silver got stopped out here, right? Because they might have put their stop here, and this stopped them out of their position. And let's say silver goes up, well, they have to catch in, right? They have to jump on again. And the short traders who got in here, well, they might have their stop here and then basically up here. Well, they find themselves trapped into a bad trade and they have to get out, right? And this basically fuels the trend. So this is silver, a 4-hour S1 pattern. Here's the entry. Here's the stop. Another important rule is that we'll just talk about the main rules. Is that we need a touch of the 21 moving average. So that's support, right? Being support here, support. It's been support here. So the stop is on the other side of the 21, right? One time frame higher on the daily chart, and the weekly needs to be trending. It is trending, and even this looks very bullish too, right? So that's an interesting pattern. Looks much more bullish than gold, right? Silver. So this is the pattern here. Let's move to the next chart. This is the pattern we just looked at. So that developed well. And now just this week, another signal trigger. This is an S2 pattern, the turtle pattern. Like this is the entry, this is the stop as well. We've got a test bar, right? It goes through the angular test line. Now we've got two patterns in a row, and that looks very bullish, right? The weekly and the monthly looks incredibly bullish, right? It looks like it has been like consolidating and not showing a lot of momentum. Now these are stop run levels. We don't see it, but to the left they are. And that basically projects it into this target area. So hopefully we see that big move in silver. Well, if gold drops pretty hard, well, silver will go down as well. So it depends a little bit on gold. If gold remains like stable, silver can explode. But if it does not, well, the stop is in place, right? It doesn't really matter if it does or not. So if you look at another asset class, Dow Jones, right? US equities. This is a trade from last week, I think it is. Again, this you can see here nicely how this is a consolidation pattern on a horizontal line, right? And we're looking for swing touches or touches. Price is getting there, swing touch, swing touch, swing touch. So that builds pressure. And what's nice here, we've got lower highs, and each of those circles is basically a stop run level, right? Stop run level of this is the consolidation. And again, we've got a test bar here, right? Excitable price action event. It tests the 21 moving average, and we're in a trending chart. And here we've got other stop run levels in a higher time frame. So that looks very bullish for a swing move. And this is what happened. That's happened on Friday, this Friday. Well, we see it, right? We got a big move. So in this case, not happening always like that, but these are the stop run levels, and basically with 1 and 2 bars, all the stop run levels have been taken out, right? That's a big stop run move, and see here as well. And we're basically now attacking, right, these stop run levels on a weekly chart. But as you can see, this is a very low risk idea, right? That's entry and stop. Very low risk idea, and having the potential to actually break these levels, right, and make a new high. This will produce a bigger multiple, right? Well, it is already big, right? It's already at 4R probably. Now let's move to energies. That is natural gas. That's just recently, I think it was Wednesday or Thursday this week. That's a short pattern, S2 short. This is the pattern. Again, you see the test bar, right? See the test bar, and we see here the stop run levels, right? And it's trending down. Let's see what it did. Well, it created momentum. Why did it create momentum? That's an exponential move. Well, it took out this top run level, right? And then it took out this top run level, and now it's taking this out, right? This is what created this move. Now, these levels, they act as a magnet, right? So price is uh, drawn to the levels and then pushed through a magnet. Well, they're not pushed through forever, right? It's like a magnet. It goes through, and once the stop run move is over, well, then we get a pullback, right? We're basically capitalizing on a big move, and then our Excel algorithm takes care of it because we're expecting then a big move back, right? So somewhere here. So that's natural gas on a 15-minute chart. It was a trade on 15. Okay, yeah, well, that continued actually. It consolidated on a low level, and then this was a stop out. Yeah, right here. So that was a nice one. Let's see what else do we have. Okay, Ethereum as well. That triggered, I think it was yesterday. That triggered yesterday. So this is 4 chart layout again, right? 4 hour daily, weekly, monthly, and Ethereum, that's an S1 pattern. That's a rebreak, so that's the entry signal on a 4 hour. We've got a nice touch of the 21, and here we are breaking to new highs, right? These are stop run levels, breaking to new highs on the weekly and on the monthly as well, breaking to a new highs. So what we see here, this little move above this one, this is a new all-time high, right, in Ethereum. And this chart as well, this is one pattern, but patterns come up on any time frame, right? On the daily chart, we had a pattern here, and we had a pattern here as well, right? These are unique signals. And here on a weekly chart, well, we had an S1 entry pattern here, and on a monthly chart, we just had a signal, a long-term entry signal into Ethereum. That's an S2. All this is the pattern. This is the momentum move. This is the pattern. So we should actually see, sorry, we should actually see that Ethereum is moving to much higher levels. Currently, it's at 5,000. If this is a prior momentum move, this went from around 70 to 5,000. That's a 50-fold, and we're expecting a 50-fold from current levels. That's pretty unbelievable, right? I don't believe it, but that's what the charts are telling. So we are looking for a target of around 200,000 for one Ethereum coin, right? Not sure how that's going to happen, but well, it takes years, right? It will take a couple of years, 2, 3 years, but that's a projected target, right? Ethereum. Any questions so far? If somebody's asking for trade opportunities for gold for daily traders on the daily chart, I guess you mean. Um, Well, not today. I'm probably doing another webinar in 2 weeks, Saturday in 2 weeks. We'll talk more about current and recent opportunities. We can look at gold as well, yeah. Okay, what are the recommendations for this environment of super cycle trends? What is the recommendation? What does it mean for you? Well, we've already seen spectacular moves, and well, that lets most people stunned. Well, what does it mean, stunned? They don't understand it. They get confused. They get FOMO. They get stressed, and that means they're not going to act right on the next opportunity. They just feel frustrated that they've not been able to capitalize on. Well, because it's difficult, right, to act if you don't understand what is going on. But if you use that idea, well, let's call it idea or hypothesis, right? Of the big debt bubble burst, that a lot of money is looking around for a safe haven. Well, that makes a lot of sense, right? How these bubbles get created. Now, the volatility we already see, right? The recent sell-off, the tariffs announcement in the US, big volatility spike down. Well, this is going to intensify over the years, right? So don't get scared. This is something you need to expect and always work with a stop already. Volatility is a trader's best friend, so it's a good thing. Like in our community, the traders of our community, we follow the patterns, right? The visual patterns. And the patterns, they tell the story even before the move happens, right? If you get a bullish pattern and another bullish pattern right after that, well, that tells something that there's a lot of bullish pressure in the market. We know what the target is from the prior momentum move, and that basically frames the trade, right? So the pattern tells the story, and we only trade we only trade trends. These are trend following systems, and the charts, right? We're not interested in news, what the news are telling, what the fundamentals are telling. We only trade the charts, right? Visual patterns. That makes it much easier, and yeah, everything is already included in the charts anyway. Um, so you should navigate the financial markets very nicely if you know what is going on. So that has to do with beliefs, right? Beliefs on the super cycles. You need to diversify and want to capitalize on huge trend moves by trading different asset classes and be flexible with the time frames. If you only look at the 5-minute chart, well, you're missing a big part of the picture, right? With futures, well, the nice thing with futures, we are very flexible with the time frames. You can trade 5-minute, 5-second charts, 15-second charts, like patterns on the 15-second, on the 1 minute, 5-minute, 15-minute, 16-minute, to 40 daily, weekly, even a monthly chart. That would be an investment, right, with an ETF, but based on a futures pattern. So be flexible. I'm very flexible with the time frames. Well, we've got even a trader group that actually focused on the very low time frame, the second charts, trading those. But being flexible is actually the best because the patterns, they come up on all those time frames. So if you trade what you see, the pattern and the trend, while managing your exits, then you should do financially well, right? Now, with this cycle unfolding, that's a global thing. We're looking at a scenario the world has never experienced before, because the whole world is moving like that, right? Before it was individual countries who were in a Great Depression. Well, now it's the whole world that is moving in bubble mode, right? And that's a lot of synchronicity. Get ready and capitalize on these unique trading opportunities unfolding over this coming decade. So there are 10 more years to go. And important, well, don't be stressed, don't be overwhelmed. You don't need to be perfect as a trader. You only need to be slightly better than your counterpart, right? And being aware of the super cycles and the big debt bubble burst, etc., when you already have a huge edge that puts you ahead of most other traders who are getting confused, stressed, and overwhelmed pretty quickly, right? So it's about enjoying this huge and incredibly right, whether you're day trading or you're investing, it doesn't matter, right? You will do well when you're positioned well, when you hold on, and when you have a good exit algorithm. So trade the markets while staying safe and in a good mental state. Everybody knows that this is important, right? Be in a good mental state. It's a bit of a challenge, right? During these times of volatility, uncertainty. But talking about all this, where it comes from and where it goes, should actually help, right? The mental state and produce some confidence, right? And some certainty. Okay, well let's open it up for Q&As. I didn't get a lot of Q&As questions so far. Let's see what we get. You can speak up by unmuting, or you can write it in the chat. After the Q&A, I'm talking about special discounts for this coming workshop
Hello, hello.
and some bonuses. Yeah,
Hello.
Ganapati.
Yes, sir. Yeah, good evening, sir.
Hello.
Yeah, good evening, sir.
Good evening. Yeah.
Yeah,
What
so can we know the movement of Forex? That means currencies, how it will be?
the currencies? Well,
Yes,
that's
sir.
a different topic. Right? That's the great currency shift. I've got a top 4 currencies and bottom 4 currencies. Well, the weakest currency is the yen, and the strongest currency is the Swiss. And that's what we're seeing for years now. I'm talking about that for years, several years, and we see that, right? Swiss is very strong, and the yen is very weak. Why is the yen weak? Well, because the Japan is one of the most indebted countries in the world. It looks terrible. Well, money is getting out of the yen, right, and into the Swiss, which is perceived as a safe haven currency.
Okay.
Look, I mean, I've put the link of the great debt bubble burst, and we're talking about the big currency shifts there. You can rewatch it. Okay, Eric is asking. Hi, Eric. How you doing? Okay, Ethereum. I talked about Ethereum back then, right? In the group. Well, Ethereum should go up 50 times. So you're asking why it should go up 50 times. So let's have a look at the chart. This is Ethereum. Let's have a look here at the monthly. Well, on the monthly, it already went. This is the pattern we're looking at. Very long pattern, right? That's 3-year pattern, and this is the momentum move. It went from 70 to 5,000, and that's basically a 50 folder, 50 times, right, from here to here. And we're expecting the same thing to happen from here to here. And 50 times 5,000, well, that brings us to 250,000. It's just the logic, the visual logic of the pattern that the target gets projected from, yeah, it depends on the prior move. If the prior move was big, well, then the target is far out. That's what was the case for Ethereum. And back down here, because that's another pattern. It was below $10, right? Let's say it was at 10. It went to 1,400. From 10 to 1,400. Well, why shouldn't it be able to go from 5,000 to 200,000? It did it already twice, right? Another question. We're just following the logic of the charts. It's no fundamentals behind. Okay, Daniel is putting a link. Okay, thanks for that. Well, very, very bullish for crypto is that the US administration allowed cryptos now in 401k retirement accounts. Well, that will bring quite a lot of money in cryptos. Yeah. But let's not talk too much about cryptos. I know some people love it, but others don't have that much interest in it. I'm offering a crypto day, right, as part of my workshop. It's day 6 is crypto day, but that's a special day for those that want it. Any other questions?
Sir, one
Gabriel,
last.
sorry, Brendan here. Gabriel, do you think, with the Nasdaq, the Dow, and the S&P 500 reaching all-time highs currently, do you think there's going to be a big sell-off, and do you think there's a recession on the near horizon, like within 6 months, or a big sell-off? Maybe not a recession, but
Well, you're asking me something. I have to look at the chart. So because I don't know. I have to look at the charts. Well, let's do that. Long term. Where did we look at? Let's see. I think it was here. Yeah. Here it is. Okay. Yeah. So, well, this is the pattern, the recent pattern. It just made a new all-time high, right? Well, I don't think it's going to crash now. What we're going to see most probably, and there's nothing certain, right? But that most probably is that we're seeing a momentum move of that sort, right? Of that extent. So that brings us somewhere around 53,000 from 45 to 53, and it should take that time. So that is a monthly chart. So that's probably around 12 months. So we should be good for 12 months, right? That it goes up. Well, there will be corrections along the way, as we have seen here, right? But probably this target is achieved in around 12 months. And then we've got another high of that sort. It might go sideways, and then we see another drop, right? So it looks like this year nothing is coming up of that sort. Probably next year, yeah.
Hello.
Yeah.
Hello.
Yeah.
Sir, one last doubt.
Yeah.
Is there any workshops you will conduct for this day traders, sir?
Is there any workshops? Well, what is
For
coming up?
day traders,
What do you mean?
especially.
For day traders?
Day traders.
Yeah.
Yeah.
Well, the day traders trade different charts, right? You might trade the second charts,
Yeah.
5 minutes, 15 minutes, to 40 minutes, maybe even
Yes.
trades you can complete within a day. Well, the systems I teach, the patterns, they are fractal, right? It doesn't matter which time frame you trade. You can trade the same pattern, the same rules on a monthly chart, or it could be a 5-second chart. So it depends on you what you like to trade, right? If you like to trade a day trader, like to trade the second chart, or we've got a team of traders who do that. Well, then you're welcome to be part of that.
No. I'm asking, is there any workshops you will conduct for to give some strategies like that?
Well, that's what I just tried to bring across. The workshop I'm teaching, the patterns and the systems, you can day trade those on a 5-second chart. But you can invest with those as well, trading a weekly chart. It's the same systems, right? Exactly the same. No difference. So the coming workshop teaches you how to day trade.
Okay.
But not only that, more than that, right?